Good afternoon. It's Wednesday, August 3rd. Closing bell just rang. Let's look at a couple markets. Not a lot's changed as far as S&Ps and the bond, but I do want to go over some longer term plays that we've been making some moves on the last couple days, and I just want to kind of highlight. Sometimes, most of the time in the room, I'm talking about really micro day trade type of scenarios, and then obviously we're swing trading a lot, but I don't want to lose track of the overall longer term plays that we can really make a lot of money on. So I trimmed some positions and booked some gains today on some plays that I had as far back as April, and I kind of want to look at those real quick if we can. And again, I put that in that all that analysis and the trade ideas and the execution and the exits and the sizing and all the timing from my model. That's all involved in the preferred portfolio. And it's for a stupid price, guys. It's $50 a month. And I designed it for the more the investor, the more long-term plays. But I had it in mind for the average investor. So if someone has an IRA, 401k, $50 a month, you can follow along. It's a 70 to 80 slide deck, a monthly analysis I do every month. But you're also going to get the long and short book. You're going to see the whole portfolio, how I like being positioned, talking about things global macro, where the trends are, big picture trends. But that's a place also where, I'll trade Apple for the next 15 years. So sometimes we'll be heavy long, sometimes we'll be really light position. But I'll be trading that stock, and I'll be trading long-term call spreads and ratio back spreads on those type of investments. And really, that's what I designed that product for. So I kind of want to let people know about it, obviously, that those that are new, but also everybody that's on the team, that's a pretty new product. So I'm excited about it. You guys should check it out. It's really a no-brainer. I mean, one trade, you're going to make 10, 100 times what the cost of the service is. So anyway, I'll get into that in a little bit. So if we look at S&Ps, just a grind higher today. This is the intermediate term downtrend that we're in now. Well, this is the 15-minute. You could call this the near-term trend. We were thinking about making some sales today if we got up early around 21.56, 21.58. Didn't really get those off today. So I'm going to offer a few tonight, 21.61. You can see that's pi on the 15-minute chart. If we move down to an hourly, we can put things in a little bit nicer perspective. So this is the bottom of the range, 21.55, 21.50. This is my reversal level on the long term. So the bearish reversal or the new TMS break that's going to move this trend lower. That still stands at 21.50. I talked about yesterday you couldn't close below it, and looks like today we closed 21.55 3/4. So haven't broke trend yet to get this move back to 21.25. But that said, I like the way the hourly's kind of rolling over. So you can offer a few contracts tonight, 21.62. I think that's a good spot. You can see how the pie is trying to roll over here. The 200's rolling over also. So that's the right location. Pretty self-explanatory there. I think, I did buy some. I'm pretty short S&Ps in the Nasdaq right now. So I've been trading the Dow around from the long side against it, and I bought a little bit yesterday down here, and then I popped that out today. It's not big gains, but it's worth trading it around. And we bought really well after the Brexit from the long side, so that's kind of how I'm playing the Dow. If you want to look at the long 30-year, I actually bought the low today in the bond. I've been trading treasuries for 10 years, so people say you can't pick a low, you can't sell, you can't pick the top. That's bullshit. That's people that don't know how to trade. We do it all the time. So I bought the lows down here, 171.15. We made like 23 ticks. So it was just a small, I was just bidding here. I was bidding more down at the lows from yesterday. And then for a swing time frame, I really like buying the lows from, I guess it was last week. What day is this? This 21st. You got pie down here also. So this is the right place to be looking to buy treasuries again. We bought them pretty well a couple weeks ago. We sold into the highs. So it's just rinse and repeat. Guys, just stay with the process. If we get back down here to pie, towards pie, we'll see what the cycle looks like. But that'll be a good chance to buy. And then you can see how I played multiple time frames, right? I have a big picture long-term opinion or bias or position. This is how I'm trading the intermediate term, and then I'll do, I'll buy a 1 or 2 lot here sometimes intraday, make a little bit of money, just trading around my core position. So you can see this is my average right here after I made these sales. So that's fine, we're sitting pretty. And then in oil, we're a little bit more active today on oil. From an intermediate term basis, you can see when I highlight the wave structure, it's pretty bearish, right? This trend is easy to see. Everything's moving south. 200 south, declining, descending. Pi cycle rolled over here. All right, so you can see my covers. This is where we're pretty active on the short side and up here. And then I just had a few puts coming in today, and then I resold some stuff finally. I got a little bit of a bounce. And I sold some futures that I was going to cover some futures and hold intermediate term, and I was also going to try to get some back day trade. And oil didn't want to back off, so I took those futures off. I'm going to offer up here 41.80, excuse me, and right in front of 43. You can see this on the hourly a little easier. So I'm just going to offer a few up. If we get a bounce, you can see how I'll work my position. I'm going to sell light on the way up, and then as this thing rolls back over, I'll hit it harder on the right side of the chart. All right? That's how you do it. The professional knows how to work his size. So hopefully we get a bounce. This is the 200 on the hourly. Pi is up here around 43.25. That's the sweet spot. So this thing can bounce still. I mean, we are high on the cycle term, but it's pretty oversold. So don't be afraid of a bounce. We'll probably get one. But here on the 4 hour, notice this descending wave structure. The upper bands are over here around 42.80. So you can see why I want to sell. You can see the cycle's coming back up. So let's just be patient, let it come to us as far as oil features. Alright guys, and then like I talked about at the top of the video, I want to show you some longer term trades here. This is silver wheat, and I wrote about this on the blog back in April. I was talking about how I've been bearish the metals for a couple years, and we were basing last year, and then finally we're starting to turn the corner here long term. And so in April we were started getting long. This is Silver Wheaton. This is one of my favorite companies. They're a silver streaming firm, so they don't actually pull. They're not in the mining business. They don't pull the metals out of the ground. What they do is they enter into contracts with other mining companies, and a lot of the companies will have big projects where they're actually pulling out gold or they're pulling copper out of the ground. And these guys will come in and say, hey, well, you guys are mining for copper, you're mining for these other metals. If whatever you guys are pulling out that's silver product, we'll do a deal with you now. We'll pay you a fixed price today, give you cash at silver spot, say, I don't know what they're buying these days, like $7 $7. Pay them cash up front, but then they have the rights to sell that mine's silver out into the future. So what this does for this company is they don't have a lot of the operation risk, or zero, and they lock in the price of silver when they do the deal, and then any rally in the price of the commodity or the spot price is just extra profit for these guys. So you can check out their site, silverwheaton.com. I mean, it's a great company. It's not very many employees. Last I checked, like 15. They're out of Canada. You ever get a chance to listen to a conference call? I mean, professional group. So I'll just tell you, the last time, yeah, crap, let me zoom back out. Last time I was bullish, this company was back in 2008, 2009, and silver wheaton was at $5. I thought it could go back to these highs 2007 and make new highs, and then it ended up going almost to 50. So it was a 10 bagger, guys. I mean, it was more than that. It was really, if you want to look at the low at 250, right, $3, almost 20 times your money on that trade. So if we get another rip-roaring rally in silver the next 3 to 5 years, this company, don't rule out that this company couldn't make new highs above 50. It's very possible. So anyhow, I was getting long silver wheaton back in April. This is a monthly chart. You can see this red candle. This is what I was teaching yesterday on our webinar. We have 1, 2, 3 bars up. You get one wimpy, puny red candle that gets taken out by the bulls. We call that an RBI, or red bar ignored. And a lot of times it'll mark the middle of the move. You can see this is the first leg up, RBI, boom. About the same distance, if you measure from here to here, is from here to here. So this happens a lot. The RBI, GBI tends to mark the middle of the move. So, but you can see this monthly cycle turned down here in September, and it's been a nice trade, but we're pretty overbought now. I mean, the cycle's extended, and price is overbought by looking at how extended it is from the 30-month. So I took 80% of my long off today. You can see the stock is up 75%. All right, my calls I put in the room are up 229% or something. I did a call ratio back spread. I went out like 9 months. So that's been just a hell of a trade. And this is the types of returns that we're going to generate and that I'm going to be putting in the preferred portfolio. So, I mean, just on one of the call structures I did, we netted 11,000, and that was just on one of the legs. It's $50 a month. It's $600 a year to make 10 times your money. That's what I was talking about at the top of the video, guys. So, you know, I'm trying to be serious about it and stress how great of a value that is, because these are the types of returns that we're going to make. I mean, this is how we trade. These are the type of opportunities that are out there. You can see that the wave structure was bearish. This is the weekly chart. All right, and now look how everything's turned back up. So we're very well extended. This cycle is really high up here, and we're going to get back in on the next multi-week dip. But we rang the register today. That was a great trade. And there's a lot more where that came from. All right, some of the other names lately that I put in the preferred portfolio is General Motors. We sold the high. My guys, we were buying puts. We made a lot of money in this trade the last week. I think this can even go lower, but you can see you can see what we're doing there. Sold a little here, sold more here, heavy, took some profits, bounced, resold, covered the low yesterday. I mean, that's just professional, good trading right there. That's some high-level stuff. I mean, there's just so many names, guys, that I put on that sheet. Takes me 3 days to do the analysis. I mean, I'm working on it throughout the month, but tightening it up at the end of the month, it's great stuff. So check that out at the site, jenkinsrm.com. RM is risk management, jenkinsrm.com. XRT covered yesterday some down here. We're going to keep selling bounces there. Financials. There was another one I put in the room today. Oh, we sold some more financials today. You can see that a little bit better on the hourly here. Sold the highs. I mean, look, guys, this is a long-term play. So we were starting nibbling here. This is what I mean by the left side of the chart. As this sine curve goes up, cycles up, start selling a little, start selling a little, but you're on the left side of the curve. You want to be selling on the right side of the wave rolling over, right? You want to be selling on the right side of the cycle as it rolls back over. So we sold well up here, covered. All right, we're still short. We're going to keep working this thing. Financials look like crap, especially in Europe. The video cut out. Sorry about that. I don't know what happened. I hit the escape key. Just to tighten this, couple last things up here. I mean, I don't want these videos to be too long, but it's tough for me not to get going and looking at the markets without doing a little bit of teaching. So I think we're already about 14 minutes on that last one. What I was saying on the financials, though, I still think this is a key thing to look at, global macro. Europe's going to be a big pain point. All the crap that's going on with their banking industry, I mean, there's a lot of risk embedded in that. I mean, and the media doesn't cover it over here as far as from a U.S. perspective. So I know there's a lot of guys on the team that are international. So maybe you have a better feel for what's going on over there. But I just think there's a lot of risks that our markets, U.S., I mean, nobody really even is paying attention to. So I wouldn't be surprised at all if we have one or two events, you know, some sort of banking event, and there's some contagion there. Wouldn't surprise me in the least bit. So, but anyway, we'll just trade what is and what's going on and what prices in the market's telling us. And that's telling us that there's a lot of stress, there's a lot of issues, European banking system. So I like being short here, playing puts. This trend's down. I mean, just bearish all year. So I think we should see risk markets trade off if we get a move back down to the lows here from the Brexit and from the July lows. So we're going to be keeping an eye there. XLF, obviously the U.S. financials are a little bit stronger, but I'm playing this level. I'm playing short. I really would like a little bit of a flush to get 80% covered up on some financials. You know, I'm short FAS, the ETF. I'm short CIBC. I'm short Synchron Financial. We're short GM. So I still think that's one of the bearish. It is one of the most bearish parts of the economy, right? And XLU is on the other side of that. Look how bullish this has been all year. Probably should have bought some back today. So you can see where we sold. Is this Friday? I can never see. These dates are hard to read down here. Well, guys, XLU is back near pi on the hourly, so I missed that today. We should have been buying some back. So let's pay attention to that for tomorrow. XLU. Oh, I was talking about before video cut out. Valero, nice move today. I wasn't paying attention to the news. I don't even know if they had earnings, to be honest with you. I don't get caught up in a lot of that day-to-day news, and I use the news to, you know, you're going to buy the rumor and sell into the news. So I honestly have no idea what the news was today. But long term, I was buying down here, and I like this play. I like the refiners longer term. I think you can see Valero's bullish long term, as long as this wave structure holds here. If Valero doesn't hold here, then you can get a move back to the 200. I won't be sitting around long for that type of setback, 46 to 32. I mean, but I like this bottoming tail on the monthly level. So we got long here in the portfolio, and I took some profits today just because we've had a nice run. So I was telling the guys that are in that preferred portfolio team that you can take some profits into this upper band. It's the right spot. But keep some on for maybe we get a move back to 60, 61. So this is a longer term play, right? We're going to be using the weekly and monthly charts a lot. So that's what I'm talking about. This 60 area, that's the next place. You can see we kind of held this 200 area on the weekly level. So that's how we'll work a long-term core position. So anyhow, so if you guys want more info on that, the preferred portfolio, I talked about it a lot today in the video. I don't want to promote too much, but it's one of my best services. I'm proud of it. It's great for the longer term investor. So you can sign up right there. If you go under the top of the site under analysis, it's right there under the investors section. So that's it for today, guys. We'll catch up with you in the morning.